Hey, it's Clay, and this will be a video chart on ticker symbol AKER. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually today's price action broken down into 30-minute time slices. I like to do this time frame that does a good job of telling the quote-unquote story of the price, and then makes mapping outward levels of support and resistance a bit easier to see, and makes summarizing today's price action pretty straightforward. Today's price action, obviously very crazy, but when all the dust has settled, essentially this thing just turned out to be, however you want to look at it, a gap and trap or a pump and dump. And when I say pump and dump, I don't mean that towards the company. I don't know anything about the company. I'm making that statement based on how the price acted, hence price action. So price action-wise, yeah, pump and dump. Maybe you've heard gap and trap before. Maybe you haven't. But, if you have heard it, maybe you aren't quite sure. Essentially, the price was here. It gapped up to right there. But even after the gap up, the price ran all the way up there. And, some poor souls actually bought up around $3, $3.15, $3.20. And then from that point forward, essentially, the price just got drilled back down the remainder of the day. And, when you talk about a pump and dump, that's price makes a great move. And then within a short amount of time, and considering this all happened in one single day, I'm hoping we can all agree this did indeed happen in a short amount of time. Price goes back to where it was. And that's where you could argue, I suppose, a little bit, well, Clay, the price closed right there. And, previously it was down around this area. So, from that point of view, then this is where, the one level of support that I would call the must-hold level, the no-excuse level, the do-or-die level, whatever you want to call it, right here at $1.60. Why is $1.60 so important? Well, for the reason kind of that I already alluded to. If the price were to go down there, break through there, and then continue on down, at that point in time, it would officially be putting the price right back inside of that range of the chart where it was before the big move started. And price movements that go back to where they started, not exactly a sign of true power at all. However, like I said, to be fair, from the big picture point of view, if the price does actually bounce around here and start to work its way back upwards, then yeah, from the grand scheme of things viewpoint, you would technically have a level of lows there. You'd have these lows right there. And yes, stair steps progressing in the upwards direction. I do realize that if you're, you went into this trade from a day trading perspective and bought anywhere around here, then yeah, the chart looks terrible for you. But from a grand scheme of things viewpoint, technically speaking, sure, the price does still have an opportunity, but definitely, price going down below $1.60, that's putting the price right back to where it all started, and that would be the epitome of a pump and dump. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.